Hey guys, this is another look at ZB. There have been some real developments this week, and it looks like bears have lost some significant battles and levels this week. So, starting here, ZB loves a channel, and when you break out of a channel, the assumption is that you're correcting something at a degree of trend larger than anything in the channel, and that this is a complete wave. And so I always like to review these, and this last move was clearly five waves: one, two, three, four, five, and that's a wave four zigzag, and that's a third wave, and that's a one, two. So wave five is pretty straightforward: one, two, three, four, five. This looks like a fourth wave expanded flat that goes A, B, C. And then if this is a 1 2 to start things off, wave 3 goes 1 2 3 4 5. So again, the whole structure is a little 1 2, a long 3 4, and then a 5, like that. And the simplest path forward for bears would have been a sort of sideways wave 4 correction that stays below this line, which was the bottom of wave 1 of this weekly structure. And that did not happen, which is a real problem for bears. So if we go to, let's see, if we go to the weekly chart, uh, bond bears wanted to see yields go up and capture this 236 target, and it seems like instead they have whipsawed this 618 line right here. And what that looks like on price is this previous support zone failed to act as resistance, and we've penetrated back into it, and we've overlapped the bottom of what I was calling a wave 1, which is a real problem because now we just can't have a straightforward fourth wave and then a fifth wave down. So the only way forward for bears would be, again, if this were a triangle, and if this were a 1 and a 2, this is not all of 3, but it's just 1 of 3. And then we'd have a 2 of 3, and a 3 of 3, and then a 4 of 3, and then a 5 of 3, and then another 4, and then another 5. And I guess it's not impossible. It just seems less plausible than if we would have just simply had a 4 and a 5 right here, which is what I was sort of expecting. But in the event, we had short coverings off of this weekly target right here, and we had longs buying the underthrow of the secular channel right here, and that was just too much pressure to contain below both of those key levels, this former support zone and the bottom of a wave 1. So now, it is possible that this entire 2-year structure in this purple channel is corrective and not impulsive. An impulse would have looked like a 1 2 3 4 5, but instead it could be, go back and look at this wave as a 3 3, and then this is a big 1 triangle. So this would be a 3 triangle into another 3. And oops, I didn't mean to do that. And I don't use this tool very often, but I like looking at corrective patterns. And if you measure that wave and then you drag to the top of the triangle, this 3 wave pattern comes right to the 618 relation to this wave right here. So it'd be a 3 wave, a triangle, and then a 3 wave, and this wave is 618 of that wave, which is sort of kind of textbook correction, honestly. So is that everything I want to say on here? Yeah. So I'm not holding my breath for a a wave 2 up and then another wave 3 of 3 down. I suppose it's possible. And on ES, it's common for when you break a short setup, you immediately come halfway back long. And if yields were going to do that, then they would come all the way back down to this zone down here, 1.6 to 1.79. And so I'm not a finance geek, and the finer points of the math on this escapes me. But this move from 11.29 up in yields was a 53% move in yields, and on price from 11.29 down, that was a almost an 11% move on price. So it's an at least 4-to-1 relation yield between price and yields. And so let's just say yields were going to come back down and do a long from lows now. That would look like, let's just call it into here. That would be about a 36% move on yields. And so on price, that would be at least 9, probably 10 or 11%. And so a 9% retrace on yields, you would be punching out of this purple channel right here. And the top of this wave is at 8.5%. So it doesn't seem like if yields came all the way halfway back, that price could contain a move of that magnitude in yields. It would just go up further than anything in this structure could allow and still be bearish. So let's go to the price chart and I'll show you what I'm talking about. So there was a real battle around the bottom of this zone right here, which is 149.18, and this close on Wednesday was at 149.18, and this yellow line is 149.18. And so I think this was Tuesday overnight. They penetrated into that zone, and then yesterday on Wednesday there was a battle all day, and no hourly bar was allowed to close above 149.18. And then again in the Asian European session, price went up into that zone, and today the 9 a.m. bar was pushed back down and closed at 149.18. And then on this big 10 a.m. bar, that was a sign that bears did not have control. So bears lost control of this resistance zone right here, what should have been resistance. Bulls started getting hourly closes, and then this red line is the bottom of what I was calling a possible wave 1 over here. And if this were going to become a wave 4, we couldn't overlap that. And so that line was at 150.12, and the high today was 150.13. That is not an accident. Today, it was like trench warfare, or it was like watching a boa constrictor slowly squeeze its prey to death. And the mission was to get to 150.13. And as soon as the algos got there, they let off the gas at the end of the day. So this is a real problem for bears. It's possible that this whole 2-year cycle was just a big WXY correction. But we won't know until we, break some retracement levels to the upside. And as far as looking at this hourly chart, so the way I'm sort of reading this here is that, that was this was 5 waves up and then 3 back. And then this was 5 up, and then this was 3 back. And then this is such a mess that I have a hard time viewing it as impulsive trending up. right? And we're sort of, there's some variation of channel resistance in here somewhere. And so I'm tempted to view this as some sort of three down, one, two, three up. And this three up is sort of a B wave, and this wave is like an ending diagonal right here. And the mission was just to punch through that red line, to pierce that red line, which it did. And so, if this is a 1 and a 2 and a 1, and then this 2 is 3 down, 3 up, and then we could have a 5 down for a flat correction, right? And revisit this 148 zone and maybe the bottom of the channel. And that should be a buying opportunity for a real move higher. Sort of another reason I think this might be a sort of corrective soft B wave top is that B waves on RSI are soft. They do not get overbought. And so we see that on the hourly chart. RSI is more or less flat throughout this entire grind while price is going up. That's sort of a weak bearish divergence. And we also see that RSI divergence on the tick chart. RSI really did not get overbought during this whole move right here. So I'm sort of, now that it's mission accomplished for bulls and they pierced that line, I'm wondering now if there's going to be maybe in the overnight tonight a real 5 wave move down as they get positioned for a real move up. And yeah, we'll have to watch retracement levels, but having a third of a third wave that equals this first wave right here, it just doesn't seem plausible to me. It's not impossible, but I don't know. I don't see it realistic. So again, overnight or tomorrow, look for a 5 wave move coming down into this 148 zone again in the bottom of this channel. I think that would be a real buying opportunity for a launch in a third wave up. So I hope that is clear. I think that's everything I wanted to say. Okay, thanks guys.